Hello, it is Monday the 17th of March, and this is options expiration week in the markets, which quite often, and when I say quite often, it's like 72% of the time, it should be a bullish week. It's not a week for crashes. It tends to, prices either get pinned and go sideways or they stay in a range, and quite often this week there is a bit of a bullish bounce. However, with the amount of uncertainty that there is in the market, it looks to me, when I've been looking over the stock indexes, that it does look like people have positioned in the VIX and in puts for much lower prices, which could set us up for a little bit of a squeeze. But the kicker here is if everybody is expecting a bounce, what I have seen over the years with these options expiration week is, if they don't work, they tend to be pretty ugly. It tends to be a kind of final shakeout. And so we need to be a little bit careful being super confident that we're going to have a bounce this week, because when it doesn't work, it can be a little bit ugly. So that's my main warning and caution when I look at look technically at where we are in Bitcoin and other assets. So when I look at Bitcoin here, for me, holding underneath that, I've said all along 84,000 was a really important trend resistance, mainly because of this daily 200 moving average, which is a really big deal. We are in a downtrend technically whilst we're underneath it. We have not recovered and we are not on our way up again. And although it's a really good combination of levels, it's a 50% retrace of the entire rally from August 2024, when pretty much everything in the market bottomed, and it's one of those really great places where we should bounce. You can't rule out another leg lower, or at least to start the week a retest of the lows. What we do see on lower time frames here in Bitcoin is everything is kind of flattened out. The moving averages here on the 4-hour and particularly on the hourly are all bunched up together. That usually points to a bigger move higher. I'm not too gloomy when I look at everything we've done, particularly from this high on Friday over the weekend. This has been all corrective. These are choppy, overlapping corrective moves rather than the beginning of a new downtrend, and that makes me optimistic. But it's possible, we've done a big ABC here, and we could be starting a bigger three-wave pullback, if you like. So really, as we start the week, this is one of those weeks where it's really not clear which way we're going, and we kind of need to be a little bit patient. If you put a gun to my head, I think that there is a very good chance that we squeeze above this daily 200 moving average, and we see another leg higher, and we should, back test 90. What kind of pattern would we be looking at here? Quite often with these corrective moves, we could see an A, and this is a big kind of squeezy, drawn out B leg. So this is A, B, C for our B leg, and we see another leg higher. And if that's what we're looking at, I think we're looking for a bigger bounce back to 90,000 and perhaps a little bit higher before we see a bigger leg higher. But I cannot rule out, again, whilst we hold underneath this 200-day moving average, I can't rule out that we're not just going to chop sideways and chop everybody up, and we may even have a little bit of a nastier swing lower. One of the biggest factors in the market at the moment is uncertainty, and we really don't know what President Trump is going to do. And so until, that all calms down and the market pays less attention, this is all pretty ugly. One thing I will say about this weekend is we've had a very quiet weekend, particularly Sunday. It was a little bit of a pullback candle, but what we have seen lately in this market is really strong moves on a Sunday that get reversed. So 2 weeks ago we had this huge big rally candle back to resistance, and then we reversed. And then if we take a look at what we did the following Sunday, we had a really nasty down candle. That was the candle that got us underneath this 200-day moving average, and we haven't kind of recovered it really. So whilst I'm leaning towards a squeeze higher today's high, or that 200-day moving average, which comes in at the moment at 84,125, is key resistance. So above 84,125, which kind of, we could kind of draw this as a little flag, but really we kind of are all bunched up. But above 84,125, or a breakout from this consolidation, and I think that we do go higher and we likely back test 90,000, which should be a really nice trade. But until we break out, and the problem is with these consolidations is we could see another little bit of a leg lower before this is finished. In fact, we could kind of do a bigger ABC, 50% retrace. If I look at this big three-wave rally that we've had, and I go from lows, a three-wave back to that 50%, would be kind of a really good place if we do see another swing lower to start the week. And that would mean back to 81,000 before we have a go at the rally. So for now, in Bitcoin at least, and then that means for quite a lot of other assets, I'm in neutral, and I'm waiting to see how today is going to unfold for a swing trade this week. And if we get that bigger bounce or not underneath key resistance. One market that's been really disappointing is ETH. If we take a look at where we are on the daily in ETH, although we're at a big fib retrace level, which I had been thinking that we could see a little bit of a snapback rally from, big 61.8 fib retrace, all-time lows to highs. It's not happening at the moment. I have to say that so far this has been really shallow. That if we look at it on a daily, what we did last week, since last Sunday when we had the really nasty drop, really we've had this big drop and a bear flag pattern. One thing when you have a really nasty thrust move like we did last Sunday in ETH is a close more than 50% back of the open close, not the tails, but just you measure between the open close, would be a bullish reversal. And if we look at what we've done here in ETH for the last 7 days since this last Sunday shakeout, we've stayed underneath. So we could say, we could measure exactly what we would need in a daily close for a bigger squeeze. Again, I'm measuring from the open close, 50% back, 1,943, just underneath that round 2,000 number, which is kind of this range that we've been stuck in. So holding above 1,943 or a daily close above it could see a bigger bounce and more upside. That in terms of candlesticks, and at least would be a bullish reversal. But this one's really underperforming, and so I've got this on the back burner as well. Very similar in all of these majors. So if we take a look at where we are in Solana, let's look at the daily. We had this big 61.8 fib level at 112. Bit of a double bottom, because against that's basically a retest of that August 5th low where all of these markets bottomed. We've had a pretty decent bounce off it in terms of daily candlesticks in Solana. We've certainly done a bit better off this level than and this fib retrace level than ETH did. But this so far, unfortunately, is corrective. By that I mean, if we look from this low, it's 1, 2, 3. Now that doesn't mean that we're not going to see a much bigger move here. Quite often when you see three-wave moves, they turn into bigger three-wave corrections. So we'll see 3 waves up, and then we'll see 3 waves back, and then we'll do it again, And based on the fib pattern here, that's the pattern that I'm expecting to unfold. And 147.50 is the first target, and my second target, if we can hold above it, would be a bigger bounce if you're looking for a level to reload shorts in this one, back to 182, because we are in that golden ratio zone whilst we hold above this 61.8 level. So those are the two targets. But again, we've got 4-hour moving averages dead flat. We've been going sideways all weekend. All of our hourly moving averages here are all bunched up, and so I'm a little bit neutral, and I don't see a kind of compelling trade yet. And I expect this to consolidation in this bunched up moving averages, and then we'll see which way we break out. And I would not rule out it being lower, but again, I think the way this is setting up, it should be higher, but I can't rule out that we go lower. So for me, no trade, unfortunately. I am impressed with how a lot of these markets are holding good retrace levels and going sideways, but I just haven't got that buy signal that I would really like to see yet. Now, there were a few markets that did a little bit better. For example, MicroStrategy, which has been a pretty good leading indicator for Bitcoin, did a really good double bottom bounce, filled the gap that we made on the 7th of March last Friday, and filled the gap. In the pre-market, we're down a little bit, but this is one of these ones that should see a little bit of an OPEX squeeze. If we're just going to do a double bottom sideways range, then obviously back to this high and 319 and this 320 price and this daily 50 moving average is going to be, for me, the first resistance. That's trend, whenever you've got double bottom. Unless you break the highs of this range, you're just basically in a sideways range. But I would expect this to continue higher in MicroStrategy. And if we break out from this double bottom, very clearly we've got a target back at these highs, twice this distance, and back to 404. But I would expect some trouble up here at 319 the first time we retest it in MicroStrategy, and we're just going sideways unless we can break and hold above that important daily 50 moving average. So that's quite a good leading indicator for Bitcoin. A few charts don't look terrible, I have to say. If we go to the weekly chart of Ripple and this sideways price action, the way we've held the 50% retrace from this 2022 low, the way we have held above the April highs here, and the way that really we are trading sideways is pretty optimistic for me that this is a bigger wave form. We've still got new highs to come in this one, but don't get chopped up in the chop. One thing about these patterns, now there's two things that's going on here. Either we're doing a big three-wave move and we're going to do a big three-wave move higher from here, or we are consolidating in a wedge or a triangle pattern. And if we are going to do this triangle, so I expect this to continue to try to go higher in Ripple. If it is one of those triangle patterns and we're going to go sideways in 5 waves, then the patterns tend to repeat. So if I measure from this high to this low, here we are at this, we reversed at this 786 fib level. So if we're going to do this again and stay within this consolidating, tightening up pattern, that's where I would expect the resistance to be, which is 2.78. And so I would say we've broken out from this consolidation and we're going to look for that bigger measured move and a retest of the highs above 2.78, but otherwise 2.78 could be pretty nasty resistance, and so that's what I'm watching out for in Ripple. If we can break out of this kind of weekend sideways pattern that we have been in. There are a few other charts that are quite interesting. One of them is BNB. Again, I feel like BNB is doing that same sideways consolidation. If I measure the most recent swing from those August lows, like everything else, here we are in a sideways fib pattern. We've already bounced once from this 61.8 fib level. Here we are back testing this 38.2. Really important resistance in Binancecoin at 643. Weak hit to start before we continue higher or lower from here. I would expect this to come back to the middle. So I'm a little bit neutral in this one as well. Whilst bigger picture, this is pretty bullish. In between, we could do quite a lot of sideways trading here between 550 and 643 in BNB. So I'm not confident that this one yet has broken out and gone back sideways. I kind of am stalking this one. I think they're doing quite interesting things, and a back test of this 50% level here in the middle, which is at 596. I think if we get a little bit of a pullback to start the week, that would be quite an interesting level to look at accumulating some in the middle if we are going to keep going higher. If we break underneath 596, because you always want to be closest to where you're wrong because it reduces your risk or the amount that you lose if you're wrong. Then back underneath 596, then we're still in this sideways range, and we could come all the way back to 550 again. So an awful lot of kind of charts of interest for me, unfortunately, are just trading sideways, and I think we need a little bit of caution to start the week, unfortunately. Let's take a look at a few more that are bouncing from really interesting levels. NIA is one of those charts that are bouncing from really interesting levels for me, but I haven't got quite the price action that I want to see yet. If I take a look at SUI as well, this is another one that's quite interesting on the weekly, because when I take a look at this on the weekly, here's this lovely weekly 50 moving average, which previously has been really cool support and resistance, and we've seen really decent tradable moves off of. And here we are sitting at it again. It's that round number sort of 2 where we found support in SUI. Markets love round numbers. The weekly 50 moving average, if I measure from this high to low though, you remember we normally expect corrections in 3-wave swings. And if I measure from this first swing lower and this correction, I don't think, unfortunately, that we've quite reached a measured move target. And so when that happens, I want to see it do something that says really obvious bottom to me. And so far, the rally that we made last week, you know, we had, just like a lot of markets, really nasty drop to start the week, and then this corrective bounce. This corrective bounce for me here is 3 waves, which says not, unfortunately, a bottom yet in SUI. And 1.68, unfortunately, would be the first kind of measured move target that we are likely to get to if we continue lower after this, you know, big 3-wave correction that we made. So yeah, you know, whenever you see this shape, if you want to get bullish, you really kind of want to see a strong higher low or a retest of the lows. Unfortunately, otherwise it is corrective, and for me a sell. You know, we could go sideways. We didn't quite reach that, catch up that daily 200 moving average. Here we are with the 4-hour and hourly moving averages all bunched up neutral, but because we're in a downtrend, you know, for me, path of least resistance is lower unless it does something kind of really impressive to show me actually no, you know, we're still going up. So unfortunately, I am watching SUI. I got a request for that one. As I said, BNB and NIA are still on really interesting levels. Some markets that are stabilizing at really interesting levels are meme coins, which of course, you know, got really badly beaten up. So one of them that's having a really good outperform today is Pengu, the pudgy penguin thingy. I'm going to take the fibs off because we're kind of really oversold, but for me, if this is going to be a bottom with more upside and back to previous swing highs, remember that rule about 50% of really nasty down candles. So you can see it here, really nasty down candle, 50% back was a really good entry to continue lower, and that's the same thing we've got going on here with Pengu and this weekly candlestick, a 50% retrace. Remember, it's the open close, don't look at the tails. And so we can say in Pengu, 740 is this 50% level. That's what we'd really like to see, a kind of daily close above. That would say bottom it in, much bigger squeeze bounce underway. So that's obviously 0.0074. So on the daily, that's going to be the close level that we need to see. If we look at this on the hourly, therefore we've got kind of room to go a little bit higher. Unfortunately, you know, there's a lot of resistance around here, but 740 for me on the daily in Pengu, key resistance. If they can push it through that and hold it above that level, we will see more upside. Fartcoin is another interesting one that's really, if we look at this on the 4-hour, it's kind of making a really nice rounded bottom. We have done a little bit of a double bottom here, swing failure pattern, and you know, when you do that, you kind of need to double bottom. You need to break the swing high in the middle, which makes 0.359. in Fartcoin key resistance if we're going to see more upside, and so far that's where we found sellers yesterday, and we're stuck a little bit in this sideways range until we do. And sometimes, you know, bottoms take a little bit longer to build than you thought, but that's one of those levels where you could put an alert, and so you get notified if it's breaking out, and we will see a bigger move higher. Bert's another one, as you know, that I like to trade. I think it makes really nice moves. Like when you identify a level and you get a really good bounce, you can make 100% return on these moves. We certainly did that last time here. We are still holding the lows back from February very nicely in Bert. Key issue for me is if we put our highs and lows on, is this 236 fib level. We could also, you know, look at weekly candles, but we're not close to this, unfortunately, really nasty weekly candle. But we can say, okay, if we get going higher, this is going to be our first target. So 16,535, that's 0.016535. And if I go back to the daily, if we get above this 236 fib level here, this will be our first resistance, and therefore I set up my trades like this, and so I like to see this as the first target. If we get here, I might take some profit or move my stops to even, and then my second target, because of this kind of doubly bottom base, is going to be a retest of these highs in the middle in a kind of bigger ABC. So a lot of stuff is holding and stopped, you know, calmed down. Now we need to see that bigger reversal or confirmation, if you like, of those bigger reversals. I know a lot of people are watching curve for a bottom, and this is another one, CRV. It is, you know, holding this retest, nice rounded bottom here. If you look at this very simply, this for the first time, gosh, since when did we lose this 20 moving average? We really kind of lost it here and kind of back and forward through it. For several months, CRV has been stuck underneath this daily 20 moving average. A close above it today should see a bigger bounce and back to the top of this range. So it's like a lot of markets, you know, it's kind of like we need one more day to see if we're going to get those reversals or not. So that's what I'm looking for in CRV. Good luck. Let me know if there's anything you're looking at, and I will cover it.